All right, good morning, traders. Welcome back to another week of fantastic experiences here with Trading Power. Just made it back just in time. Just grabbed a cup of coffee, kissed the baby, and got back just before the timer hit zero. So I'm off to a good start this weekend. But uh, seriously, guys, welcome back. Charles says good morning to everyone as well. Great pictures over the weekend, Charles. Was that a zoo you went to visit? Um, where'd you go? Ah, ah. I'm highly disappointed now. Oh, but nice pictures. I keep telling the wife as soon as our kid's old enough to get on a plane and not totally disrupt and annoy everyone, we gotta get out there to Kansas City and have her Kansas and have like a we're gonna put all the babies in one room. Jason and his soccer team and your kid and my kid, put them all in one room and let's just get a man escape trip or something like that. We just leave and never come back. But great pictures. Welcome back, guys, to another week. Many of you, this was your first week being involved with us. What did you guys think? Was it what you expected? The markets and watching two professional traders trade live in the markets, was it everything you expected, or was it more? Was it less? Did it seem fast? Was it busy? Was it overwhelming? It was a pretty big week. It was a very busy week for Jason and myself. Again, we fired off about 21 trades throughout the week, trading ideas through the trade floor, which is the second most we've done all year. We had another week where we did 22, but it was a pretty active week, and I hope you guys, again, we did make some pretty good profit. We were able to increase our equity curve by about 4%, which is always good. We're on a heater this year, knock on wood. But I hope you guys see the ups and downs of it. That's the main goal. Because again, making money isn't hard. I'm going to be honest with you guys. Making money in trading isn't hard. It's basically just having a system. The hardest part, as you guys are finding out or have found out already, is trading that system day in and day out. That's the hardest part. And I just hope we were able to show that to you. I know Friday was a great example. We were up about 220 pips going into Friday. It's we're having a great week. This is good. Really, you just want to keep the money and not screw anything up. And then Thursday night, wake up Friday morning, I see that two of my positions have been hammered by you London traders, and I'm like, come on, man, I'm gonna give it all back. And it wasn't all back, but it was. I had about 125 pips of losses, and it's like, you do all that work, the ups and downs, grinding it out. You do all that work to get and I'll try to bring up an equity curve for you guys. You do all that work to try and get a positive week, and then you start giving it back, and it's like on the last day. And I wrote in my trading recap. I think I wrote this. I'm not sure. It's kind of like it's kind of like you're playing soccer and your defense or your team is keeping a clean sheet, and then you give up a goal in extra time, and it's just heartbreaking. But you guys were also able to experience the fact that we traded through the plan on Friday, right? And what did we do? We had a monster day. We made back. We lost 100, or I lost 125 pips over London. I made 145 on Friday. So we made it right back, and we didn't do anything fancy. That's what I want you guys to see. We didn't do anything fancy to make it back. I didn't start. I didn't go into super aggressive mode and start taking aggressive trades. I didn't start doubling position sizes and adding positions. I just traded the plan. I traded the plan, and we were able to fight through and drag ourselves out of that drawdown. You can see this is our drawdown right here. This was Friday. Boom, 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 boom. Boom, 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 boom. And we came back from that, which is good. And that's those are the eye-opening moments in trading. Here, what are we doing so far? Look at this, Charles. I know you're impressed. Look at this. Is a pretty darn good looking equity curve, isn't it? Look at that. We got our bumps and bruises in here, but we're going in the right direction. This is pretty. Smooth that out a little bit. It's looking pretty good. But hope you guys are able to experience that. Yes, I did. Immediately. I'm not sure if you guys, some of you follow me on social media, some of you don't. I'll show you exactly. I got the perfect picture to explain how I felt after Friday's sessions. Many of you saw this already. I'll show it to you guys. This is my actual response. I transformed. Um, where's it at? There you go. Perfect. Yeah, this was me after Friday. Different face, but guys, the body is essentially the same. For you guys that were wondering, that's essentially what I look like. You know, aside from the face, maybe a little more muscles on there, but close. You know, close. But seriously, that's exactly how I felt. I love this picture. Um, like when you make a comeback like that, we try to take emotions out of. We do take emotions out of our trading decisions, but um, to make a comeback like that and end the week, it's boom. You just slam the microphone down and you go on to have a good day. So yeah, that is me for anyone that's wondering. I also found this morning. Here's a very good a share. A good friend of mine and a former client shared this with me on Twitter. He says, "You want to know the difference between a master and a beginner? The master has failed more times than the beginner has even tried." So I want to share that with you guys as well. So what else do I have for you guys before we kickstart things? Off to a good week so far. Made about 96 pips on the Euro Yen. Let me show you this, guys, because here's what I did on Euro Yen. This is this can be potentially a very good lesson for you guys. Euro Yen. You guys remember we entered a bat pattern on we entered on Friday or Thursday? Friday night we entered a bat pattern on Euro Yen, or a deep Gartley 1 to 2, X to A, A to B. Looks like a bat pattern. X to A, A to B here. B to C, C to D right here. Do you guys remember this? You mean yes if you remember this pattern or this trade? All right, and this trade essentially did nothing. We rallied almost down to targets at one point, about 13 pips away, and then we came all the way back up, which kind of hurt to be honest with you, but we came all the way back up on Friday. And Friday we ended right here, basically break even. And a big question that many traders have is, Akil, what do I do over weekends? Do you guys have that dilemma? Do you hold trades over weekends? Do you take them off? Does anyone have that dilemma going on in their head? Give me a yes. Yep. And it's a difficult question because it's you don't want to hold. Well, you do. There is danger in holding trades over the weekends. Gaps can occur in the market if there's any type of big news that comes out over the weekend. It can gap the market, and the market can gap hundreds of pips, and it could be beneficial to you if it's in your direction. It can also be detrimental if it's not in your direction. And we never like putting ourselves in that crapshoot position. However, if you're a swing trader, many of the trades you take, you're going to have to hold over the weekend. But one thing I do is this, because I prefer not to hold trades over the weekend. So in this particular scenario, price action had came all the way back up to break even during our weekend gap. Here's our weekend gap right, what was it, right here? Right here. Price action that came all the way back up to break even. So what I did, and I brought this onto the trade floor, what I did was I just took the position off because there's no point. I posted euro dollar. What did I post euro dollar? Uh-oh. I was rushing last night. Maybe I did post it. I don't know. No, I put euro yen, Danny. Yeah, I posted euro. I posted euro yen. Yeah, I'm not going crazy. Yeah, it says euro yen. What I did though was I exited here, or maybe you meant on Friday. I posted. I exited right here at break even, because again, at break even, there's no real benefit of me holding this. And what I said was I will wait until the weekend is over, and once we get to open on Sunday or Sunday my time. Once I get the open on Sunday my time, we're going to see where price action's at, and I'm going to re-enter. So if there's no gap, which there typically are no gaps, I was going to enter just back at market, the same price that I exited at. If there was a gap, we'd see what happened. And what happened was during the weekend, price actually gapped from about right here at 128.50s all the way up to about 128.74s, giving me on my reentry, giving me about 20 more pips of profit and 20 less pips of risk. So I re-entered on this trade. Typically, gaps are filled about, I don't know the percentage. I'm not going to give you a false one, but typically you see gaps get filled. We didn't close above our X leg. I don't even think we broke our X leg. So it was still a perfectly valid trade, and just re-entered again at a better mark and was able to make a little bit more profit out of it. And the same thing with the Aussie CAD trade. Aussie CAD trade had actually gapped past the cipher. I don't actually remember where it was at. Oh, here it goes. Aussie CAD had gapped past the cipher. We had a cipher pattern completion looking like this: X to A to B, B to C, C to D was somewhere up here. So our cipher pattern completion was at 95.39. The market opened up at 95.53. So again, you get a little bit of a better fill on here. So that's how I handled the gaps this weekend. But typically gaps do fill. So if you see gaps in the market, you can expect that they will fill. It doesn't mean that just because you see a gap, you want to enter a trade. You still want to have a reason for entry. So whether it be like this example in front of you where it's an advanced pattern, or whether it be a structure-based trade, you still want to have a reason for entry. You can't just make up a rule that says, oh, it's a gap, so I'm going to buy it automatically. Because you still have to have a place to put stops in. You still have to have a good risk reward. But don't be scared off of gaps. Again, when the market gaps up, typically we see a fill of that gap occur right after. Typically, you never know, but typically you do see that. Robert said, would you adjust your fibs if you get higher high, therefore adjusting targets? Yep, I always adjust my fib to the D leg. Always adjust your fib to the D leg. So my Fibonacci retracement, instead of my initial targets being right here, they had to move up to our D leg. Yep, even with the gaps, you always adjust them to that highest point. And I think that's why a lot of traders get in trouble. I've been there's been a trader talking to me through email, and I feel bad. He's not a member of my training course. So I make a habit of I don't like to give advice to people that aren't a member of the training course. I think that's just fair for you guys, and it's fair for myself, so I don't get overwhelmed. And this guy's talking about, hey, patterns haven't been working and stuff like that, and he's kind of going. You see, he's mentally taking a hit with him, and I just think there's a lot of things he's doing wrong. But I just don't know. But I think this could be one of them. He could, maybe he's not adjusting targets. I don't know. But yeah, you always want to drag targets to that highest point, because anything other than that is not a real Fibonacci retracement. I mean, this is, if I just draw them right here, I mean, it's a Fibonacci retracement on my chart, but it's not really a retracement of any type of price action based move. Also, with your previous trade, would you enter if you missed the initial setup? Yeah. With the going back to the euro yen, yeah. It was 100% valid trade. There are going to be times in the market where maybe you wake up, or maybe you don't identify a pattern. Maybe you miss something and you log on to, say, the 12-week chat, and you see, hey, Mark has written in, euro yen Gartley pattern, a bat pattern, and you missed the original entry right here. But when you woke up or when you turn on your computer, price action was up here. As long as the trade is still valid, it's still. And to be honest with you guys, if you can get a better fill, guys, that's a good thing. Now, you don't want to purposely wait for it. You always want to try and enter where the pattern completion is at. But sometimes you'll get lucky. Sometimes you'll be like, man, I didn't even see that. Price action has moved up 40 pips from the original entry. Guess what? You just saved yourself 40 pips of risk. If you've got a stop loss up in this area, where the person who originally entered right here to 886, they're looking at a stop loss of about that. Well, because you've entered late, guess what? You've almost cut your stop loss in half. So yeah, it's a good thing. But just make sure the pattern is valid. Again, these advanced patterns are valid as long as that X leg isn't penetrated. So as long as we don't pass that X leg, as long as, technically speaking, as long as the wick doesn't pass that X leg, it's still a valid pattern. Now, between me and you, if the wick passes it and you get a close below, that's still a very, very good sign. The pattern is technically invalid, but it's a good sign from a structure standpoint. But yeah, if you hop in late, that's not necessarily a bad thing. Again, don't do it on purpose. Try to hop in at the right moment, but every once in a while you'll hop in late. But going against that, Robert, if it's the other way around, if you hop in late before, then you may get yourself in trouble. Make sure you still measure out your risk reward, because if you hop in late, meaning the market has moved past the initial entry, now you're increasing your risk and you're minimizing your reward, and that's something you don't want to get in the habit of doing. Yep. When you take a pattern, do you look for additional confirmation once you see the pattern, or just take it? I look for just the pattern. I just take it. I am an aggressive trader with advanced patterns. So as soon as I see a pattern, what do I have on my radar? What is Jesus? As soon as I see a pattern, I put a limit order in. Let's go to Euro. Aussie has one. As soon as I see a pattern, I put a limit order in, and I look to take it. It's not going to be a good example. It's going the other way. But yeah, I don't need double top. I don't need RSI, any type of divergence. I just take it. Do you look for structure? No. And you don't really need structure for pattern, because here's the deal. Every pattern we have is going to contain structure. Every pattern we have is going to contain structure. If you look at the formation of a pattern, this is how a pattern forms, right? The market does some jazz beforehand, blah, 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 and then we get something like this, right? We get an X to A. Right? What does this X leg represent, guys? This X leg it's an initial structure high, right? And then the market does this. We get an X to A to B. We get a B to C, and then we get a D completion somewhere up in here. But remember, every time we have a pattern, aside from butterflies, the only one that we teach that doesn't complete up there, we have the X leg represents our structure level. And this is why we put stops above X, because we want stops above previous structure. So we don't need extra structure inside here. That X leg is going to be our structure level. And that's why it's so important we get stops above X all the time. Yeah. Again, the thing with advanced patterns are, relative to the rest of what you'll see in the market, they have a relatively high completion percentage, meaning most of this, if you're a structure trader, most of the stuff you get is going to be 50-50. Let's just be honest with you. Maybe a little more depending on how good you are. Advanced patterns, you're typically going to have a higher win percentage with them, just because there's more involved. So I don't think you want to. A lot of traders look for confirmation, where it'll say, okay, we have an advanced pattern, but I'll use a double top entry technique, or I'll wait for the RSI to be oversold. And what happens is, because these things often hit on a dime and roll over, you never get that chance for confirmation, and you can end up sabotaging your trading by waiting for confirmation and not just taking the trade. Now, that's something that I advise you test. I've never personally tested out how trading advanced patterns using a double top or a lower low, lower close, or needing RSI to be overbought. I never tested out using any filters on advanced patterns. So I can't tell you from a statistical point of view that one is better or one is worse. I can tell you from experience that you're going to miss a lot of setups waiting for confirmation. That just goes for in general for any strategy. You're going to miss a lot of setups waiting for confirmation. And with a strategy that's proven to have a high win percentage, you really don't want to get in the habit of hand picking which setups you trade and which one you don't trade. Rather, you want to trade every single one you can find, and you want to trade as many as you can find, because you know over time it's going to bring in profit. But that's something that when you go through the back testing process, if that's something that's on your mind, I would certainly advise testing it out. There's no harm from it. If it works out better, then guess what? You saved yourself some pips. You found a less aggressive way to enter patterns. If it doesn't work out, well, no. Now you have an answer to your question. You're no longer thinking. You no longer have a pattern that fails, that does something like this, and you no longer have those thoughts in your head. Well, maybe if I would have wished for, if I would have waited for a double top, I wouldn't have taken the loss. And then this won't bother you as much. How do you combine this with the CTS system? Well, the CTS system involves advanced patterns, so you just give yourselves 3 points. However, what I would say is this: they're two completely different systems. So I wouldn't even look to combine them. There is a part in the CTS system that says advanced pattern. I typically don't worry about that, but they're two completely different strategies. Advanced pattern trading is 100% different from structured trading. So look at them as two separate systems, two separate strategies. Don't look to combine the two. Robert says, the only reason I ask because I see many patterns and hard to know which are better than others. Yeah, that's the thing. We don't know. They're all the same. I wouldn't say any advanced pattern is better than another advanced pattern. A bat pattern is a bat pattern. I don't think one is better than the other. I don't think we need to look for one is better than the other. I think what's important is that we have a strategy that has a proven edge, a strategy that has proven to make money over time, and our job is to trade that strategy. So it's not like a CTS trade where you can say, well, a CTS 10 is better than a CTS 4. That's something we can quantify and say one is better than the other because we have that point system built up to tell us when we have more things lining up on the chart. And advanced patterns stand on their own. For me, a bullish bat pattern in a bull market is just as good as a bearish bat pattern in a bull market. Now, there may be differences what you can do with extended targets and whatnot, but I don't think one bat pattern is better than any other bat pattern. One may look better, you know. One may be a clean, nice, smooth one, and one may be a choppy one. But I don't think we can say one is better because they're all the same thing. Now, again, if you do decide to do the back testing and you test for something like only trading it when D is overbought or oversold, and you can come to a conclusion that it makes a difference, then you can start making statements like that, and you can start making, say, adjustments to your rules. But you've got to have those numbers first. And again, that's what I advise you guys do. You guys have a lot of questions, and you know, I'm not going to have the answers to all of them. But trading is going to be your journey. Trading is going to be your, you know, it's, you know, I think of it as like you're being dropped in the jungle and you're just looking to, you know, kind of find like the meaning of life. It's your journey. Make what you want out of it. Use this as an experience to grow. There's nothing bad that can come from testing. You gain knowledge. Nothing bad ever comes from testing. So when you guys have questions, you know, if I'm saying stuff like, hey, I don't think an RSI being overbought or oversold makes a difference, you don't need to immediately shoot that idea down just because I don't agree with it. You know, go out there and test it. See if it does. Answer that question for yourself. It'll be amazing what you can find. Again, a great example. Darren, when he found the Decipher pattern, he wasn't even looking for it. Darren was looking for something else. And he found the Decipher pattern on that journey. If that's not a great example of you know, just, you know, taking that journey and seeing what the market gives you, I don't know what is. Or you just see the neck test, or I'm a little behind on the question. You've seen the back test numbers, you know, you at the end you will come in. Yeah, that's what any strategy is, guys. Any strategy with an edge means that if we consistently trade the plan, we will make profit. You guys have seen so far that I'm a very confident trader. One of you guys said earlier that I keep my calm. It's because, guys, I know with full confidence that I'm going to make money at the end of the year. I have full confidence that I will turn profit at the end of the year. I have no doubt. How much profit? Now that can vary, but I have no doubt that I will turn profit at the end of the year. Why? Because I know my plan is profitable. I know my plan is successful. I've traded this plan for many, many years, and every year it has brought me profit. Now, what I don't know is on the micro level, trade by trade, I don't know which trades are going to win, which trades are going to lose. I don't know what days are going to be good, what days are going to be bad. I don't know what weeks are going to be good, what weeks are going to be bad. Months. I don't know that. But I know big picture, I'm going to make profit. And that's what allows me to stay so calm. A great example Jason always uses, I cannot find a video to save my life, but we had an episode 2 years ago where I just got hammered in Gartley patterns. The first half of the year, probably the first 5 months of the year, Gartley patterns just were not doing me well. They were, maybe 50% completion ratio. They still made money, but it weren't working. In fact, maybe they lost money. I don't know. It was a bad year for Gartley's. And I remember crunching numbers. And I did a weekend review video, and I was saying that, guys, Gartley's just aren't doing it for me. I may have to look into this at the end of the year. And it's important, I said, to the end of the year. I didn't make a rash decision right there and then to say, hey, I'm just going to stop trading Gartley's. They didn't work. And what I continued to trade Gartley patterns. I caught fire the second half of the year, and they ended up being very, very profitable. And that was a great example of, again, we don't know when the profit's going to come. But once again, it proved to me that if I do follow that plan, if I just keep trading them consistently, it will come. It will come. Akil, one of the things I do now, but I really think it's going to help me retain more profit, is instead of finding a reason to enter a trade, I find a reason not to enter the trade. In other words, I am more picky. I think that's excellent. That is something that I used to preach a lot. Find a reason why you shouldn't be in the trade. Because we can always find a reason to be in a trade. Look for reasons why you shouldn't be in the trade. If you can't find any reasons, that's a very good sign that you have a good trade setup. Yeah, I think that's good, Nanny. Jason says, so you trade every pattern you see. Yep, every pattern that meets my rules, I trade it, whether I want to or whether I don't want to. And you guys will see many times in the live room, one of you guys will shoot me a pattern, be like, hey, Akil, Gartley pattern on Aussie dollar bullish. And maybe my entire confirmation bias is bearish. I'm like, oh, man. Yeah, I guess you're right. It is a Gartley. And I'm kind of wishing that, I'm kind of hoping it touches the 786. So I don't have to enter, but it's like, oh, man. All right, yeah, so I got to trade it. So I'm not happy about every pattern I trade. There are some that completely go against what I'm thinking in the market, where, we may have, I may be very bullish the euro dollar. And all my higher time frame analysis is saying get long, get long, get long. I don't do much fundamental analysis, but all the fundamentals are saying get long, get long, get long. And then I see a pattern that is short, and I'm like, But I still got to take it. But realize also with patterns, we're not looking for this. We're not looking for a reversal in the market. With a pattern, we're only looking for this. We're only looking for a brief retracement, a little bit of relief. So that's something that can help you out mentally. A pattern is a pattern is a pattern. Amen. Yep. You need to be very confident in your system and trading plan to follow the patterns, even when you are a losing streak, knowing the system will. Yep, you do. It's all about belief. You have to 100% buy into your system. It's no different for any of you guys that played sports where you're an athlete, you're a player, and the coach is preaching to you something, and you just have to buy in 100%. Or you're part of a group team at work, and your boss is laying down the guidelines, and you have to buy in 100% to what he's preaching to you. You got to buy in. If there's any doubt in your mind, the market will exploit that. The market will find a way to make you lose money. Very manipulating. It will find a way. And if the market senses any type of doubt or fear, it will use that against you. And yes, I am talking about the market as if it is a living beast. It is. It is a living, breathing beast, guys. It's not just candles on your chart that exist. The market is a living, breathing beast, and it's out to get you. It feeds on the weak. It feeds on the weak. Akil, how long have you traded your current plan for? I've traded my plan continues to evolve. I've been a pattern trader since I started, since I restarted I restarted my trading a lot of times, guys. I've blown some accounts in the past. I've been a pattern trader since I started trading with Trading Power, or since I went through the training course. I would say I've been trading patterns since 2011, 4 years. Now, during that time period, I've evolved. I started off just trading Gartley patterns. That was the only pattern I traded. Again, this is after I went through my phases of trend continuation and ABCD patterns and stuff like that. I only traded Gartley patterns, and I slowly just added different patterns. I added the BAT pattern. I added the Cipher pattern. And over the last few years, I've gotten more and more into structure. So my philosophy is, you start with one strategy, you master that strategy, guys. Then once you master it and you're 100% confident in trading it, 100% confident in identifying it, then you add something else. So don't be that trader that goes out and wants to trade, 5 different advanced patterns and 4 different structure trading strategies at the same time. You're just going to overwhelm yourself. Trade one. Once you have mastered Gartley patterns, once you get bored and you're like, nah, this is too easy, then while you're trading and making money off of Gartley patterns, use that time to start back testing BAT patterns or back testing Cipher patterns. And then once you master Cipher pattern, then use that time to back test the next pattern, and then just keep adding on if you choose. You don't have to. You can easily be a one strategy trader and make tons of money. You can increase your portfolio. But if you want to do different, different strategies, and partially I do it because I'm in education. I have I guess you could say an obligation to know different ways to trade, because I work with different clients that have different different needs. But for me, even if I wasn't doing that, I have a pure passion and interest for the market. So I like figuring out this puzzle. And structure trading to me is a lot more exciting than pattern trading. Patterns are really, really good. They're simple. I can fire on a pattern real quick. I'm break even on Aussie dollar. Darn it. Hold on real quick. That stinks. I forgot to set targets on there, so I didn't make any money off it. Mistake. Anyway, yes, I just have a pure interest for the market, so I'm always evolving. I'm always looking for different ways to trade, different ways to tweak my system. But start with one thing, and take your time. As you get better, then slowly start adding more opportunities to you. Again, roll through these questions. Adam says, is there a point in 12-week transformation where we come up with a portfolio? Is that something we do on your own time? Yeah, we can talk about that, Adam. Yeah. Ultimately, you're going to have to come up with your own portfolio. There's no magical portfolio out there that I can say trade. But we can definitely, when it's time, we can definitely talk about how to determine how big my portfolio should be, what pairs should be in it. Do I want to diversify? Do I not want to diversify? Stuff like that. Yeah, that's certainly something we can go through. But that comes back testing is going to tell you a lot about that. When you back test, you're gonna have hard data that says, well, this strategy works better on this this pair than this pair, and you can kind of hand pick. Once you have an idea of how many pairs you want to trade, you can essentially hand pick the pairs that had the best results. A great example of if you're looking to trade Cipher patterns, and you plan on trading 4 pairs and you back test 8 of them, you can easily just pick the 4 that had the best results. That's the best way to do it, as long as it doesn't leave you overexposed. But yeah, we can definitely talk about that on the we will definitely talk about that on the way. Again, I'm sorry I'm late on questions, but you guys are typing in some pretty good ones, so I'm just scrolling through them. I've been looking at your pattern trades and been trying to find out your reasons why you take the pattern and whether you had an additional filters or not. Nope, I just take them. Nothing fancy. I take them. To be consistent, do you have to trade every day? What if you need to take a day off? That's a good one. You want to be consistent in your trading. That is something you want to do. Now, taking a day off here or there isn't going to hurt you. You know, I got to take a day off. I'm not going to be here this Thursday, guys. So I got to take a day off this Thursday. It's not going to hurt you too much in the long run. However, if you're making it a habit, especially if you're a day trader or intraday trader, if you're making it a habit to take random days off, that is going to hurt your performance because you're missing opportunities. And every time you miss opportunities, you're getting away from that consistency. Now, if you're a swing trader, it's easier because you can place trades. You can take an hour out of your day, do your analysis, place as many trades as you want to do, and then go do what you want with your day. If you're a day trader or intraday trader, you have to be more active in the markets. So taking a day off isn't. You don't need to trade every day. I typically don't trade Mondays. I don't day trade on Mondays. But you do want to be consistent with your trading time frame. You don't want to just take random days off. You don't want to say, oh, well, I'm not going to trade today. No, I'm not going to trade tomorrow. I'm going to take this whole week off. That could come back to bite you in the butt, especially if you're a lower time frame trader. My problem is not making money, it's keeping money. That's often the hardest problem. It's easy to win, it's also easier to lose. Does that not risk more than 20-30% of your account if you happen to spot a lot of patterns at one time? Do you have I think it's going back to the portfolio question. Yeah, I try not to put myself at any more than about a 35% risk at any given time. So if I were to take everything that I had on the table, I would put myself in a position where I wouldn't lose. Worst case scenario, I wouldn't lose more than 35% of my account. That's my max drawdown. I try to stick to is 35%. That's kind of the mark where it's like, okay, slow down, Akil, slow down. For beginner, is it better to day trade or swing trade? Either or. It's really more so what fits your schedule. What are you able to do? They both have its benefits. Day trading, you're dealing with a lot smaller risk levels. So mentally, it's easier to handle because you're getting stopped out for maybe 20-something pips, which is really nothing. On the negative side, though, day trading, the markets move extremely fast. So if you're not really on point with your pattern analysis or your price action analysis, you may miss a lot of trades. You may go into panic mode because it happens so quick. Swing trading, you're dealing with bigger risk levels. You're dealing with keeping trades for days, which can be torturous to some people. Seeing a trade, like the euro yen, seeing a trade bounce up 100 pips, bounce down 100 pips, and day after day after day, and staying in there. However, you also have a lot more time to do your analysis. You can be a swing trader. You can look at your chart. You can identify a pattern a week or so in advance, and it gives you that much more time to scroll through your plan and make sure you're doing it right. So there are pros and cons to each. I don't think one is better than the other. I think from a pure, if it's from a pure analysis standpoint, and we take psychology out of the question, I would say swing trading is probably a little easier just because you have more time to do the analysis. But either way, I always recommend do what fits your system, or do what fits your schedule. If you're someone that has a job and you need to be active at that job, you probably don't want to be a day trader because you can't give it your full attention. So swing trading may work better, where you can come back and look at the charts every hour, every 2 hours, every 4 hours, and make a decision. If you have an open period of time to day trade, there's nothing wrong with day trading either. Day trading, you get a lot more reps, you get a lot more repetition which allows you to build that RAS quicker and quicker. So you would stop placing limit orders once you get, yeah. Now here's the thing. I set up my portfolio, Jason, in a way where I'm not going to hit that 35% risk. Technically I could, but I set up my portfolio in a way where if I have my maximum loss on each pair, if I have a trade on each pair I take, and I calculate the potential for that maximum loss, I'm not going to hit that level. And that's why I don't trade. You guys, I don't trade massive position sizes. You guys don't see me trading 20 lots or anything like that, because it's going to allow me to reach that drawdown, that maximum allowable drawdown level, a lot quicker. Because I have such a large portfolio, I've got to decrease that position size to a level where it's not going to get me in trouble. Again, the big thing that happened to me, you guys remember my stories, I lost 30,000 in about a week because I was trading a big position size on a massive portfolio. I was trading a big position size on an 8-pair portfolio, and 6 trades got triggered at the same time. And I lost a lot of money. I don't want to go back there. So I trade about 11-pair portfolio right now. I can stretch it out to about, I think, 13. I think that's the max I can do. 13, 14, somewhere around there. But I trade a small enough position size where I can afford to get filled. This will never happen. I shouldn't say. The likelihood of this happening is rare, but I set it up where I can take a position on all 11 of the trades, or the pairs I trade. I can get stopped out for my average loss on all of those trades at the same time, and really not dent my account. Does that make sense, guys? Here, let's put it like this. Let's say you go through your back testing, and your average loss is, let's just say, let's do 100 pips. Make it easy. 100 pips. If you know that your average loss is 100 pips, and you can do maximum loss as well. Let's do average loss, because typically you want to go off your averages. Your average loss is 100 pips. If you have a 10-pair portfolio, right, and you take 100 pip loss on each pair at the same time, you're down 1,000 pips, right? You take your average loss on each one at the exact same time, you're down 1,000 pips. You go calculate your position size. What type of position size would you need not to meet your maximum allowable drawdown? If you're trading $5 per pip, can you do $5 per pip with 1,000 pip? Why did I bring a calculator out for this? $5,000. Monday. Can you afford to lose $5,000 and still be within that maximum allowable drawdown of your total account size? If not, then maybe the most you can trade is 2, because now your maximum potential drawdown is $2,000. Make sense, guys? Calculating that worst case scenario, how does $2,000 affect you? And again, this is going to change with your portfolio size. If you have an 8-pair portfolio and not a 10-pair portfolio, you're looking at your maximum being 800 pips. If your average loss is 50 pips, now you're looking at 400 pips. Now 400 pips, you're looking at minus $800. Well, maybe that's not even a dent in your account. Well, maybe now, and you can keep adjusting. You go through that during the money management section, guys. So I don't want to get too deep into it, because a lot of you guys are nowhere near there to begin with. That's kind of an idea of how you want to think of that worst case scenario, and just make sure you're setting yourself up where you're in a position where you won't blow your account. That's the goal. You don't want to blow your account. Jason says all the time, if you have a chip in a chair, as long as you have a chip in the chair, you're in the game, referring to poker. If you got some chips in the table, if you got a chair at the table, you can play the game. If you can play the game, you give yourself the potential to make some profit. If you don't have a chip, you don't have a seat at the table. Well, if you don't have a chip, you won't have a seat at the table. If you don't have a seat at the table, you have no opportunity to make profit. So it's all about risk management. You don't want to blow that account. You want to have enough where you can still enter a trade and you can always make that comeback. You can always turn your trading around and make up for those earlier losses. But if you lose everything, you're out. You're out of the game. Do you swing trade? Yeah. This Euro yen right here is, yeah, most of the trades you see me shoot through the trade floor when I do syndicate videos, these are swing trading timeframes. 4 hour for me, 4 hour, 60-minute is swing trading for me. I actually started off as a swing trader. The only reason I day traded was because Jason asked me to run a live room. I was quite fine swing trading and playing golf all day. Well, trying to play golf all day. I'm not sure what I was doing is considered playing golf. I'd be all right for about 9. I'd have a good 9-hole run. But when it got bad, it got really bad. Really bad. How did you overcome your psychological traps? What techniques have you used? What I did was I just focused on process over outcome. I didn't focus on how much profit I can make or how much money needed to be earned. I focused on strictly just following the plan and not making mistakes. That was the main way I graded myself. How many mistakes did I make this week? And I'm a big believer in the Kaizen philosophy, which is continuous improvement. So try to get a little bit better each time. So I just said to myself, hey, Akil, start keeping track of how many mistakes you're making. And, each month, my goal had nothing to do with trading, nothing to do with profit. My goal was to make one less mistake. So if it was January and I said, hey, in the month of January, I made 20 mistakes, then my only goal for February is to make 19. If I can make one less mistake, then I'm on the right path. If I made 19 in February, then my goal in March was to make 18. And I knew if I kept that up, I would eventually get to 0. Maybe not 0. I still make mistakes, but it would get, I made one today, but it would get really, really minimal, where I'm only making maybe 1 or 2 mistakes a month, something like that. And, with me right now, it's maybe 1 or 2 mistakes, every couple months. But it was really the process. It was really following the plan. And I valued that over the outcome. I didn't really care about pips anymore. I was at a point where I had just lost a lot of money, and I basically said I'm probably not gonna make it as a trader. I just don't have enough money to live life anymore without getting a second job. So I'm just gonna follow the plan and see what happens. And good things happen when you follow the plan. So if you trade 11 pairs and you have a swing trade and day trade on every pair, it's only 22%. Well, swing trading and day trading are completely different. Those are 2 different accounts and 2 different portfolios. Well, technically now they're the same portfolio because I kind of linked them together for you guys. They used to be 2 separate portfolios. It just got confusing in the live room. But there are 2 different type of accounts for that. I wouldn't combine your swing trading and your day trading if you don't have to. I would keep them separate. But if you're a lot of you guys are overseas, if you're able to place different trades on if you're able to do something like place a swing trade and a day trade on the same pair, we can't do this over here in the United States, but you guys can overseas, then yeah, you'd have to count that as basically doubling your portfolio. And you'd have to take that into account. You'd have to take in your average loss on your day trading pairs as well, and put that into the process. So it wouldn't necessarily be 22% because your average loss on your day trade isn't going to be 50 pips or 100 pips. It could be 30 pips, but you would have to take that into account if you're doing it both on the same account. You also probably don't want to be day trading 11 pairs. If you're risking 1% of your account on every trade, say I don't believe on one. I don't get into that. I just don't. That's not my way of doing it. I like to keep a consistent position size. I don't really get into the game of, well, if my stop loss in this trade is 50 pips away, well, that's only half of my maximum allowable drawdown, so I can double my position size. I don't get into that. I think that takes the consistency out of it. How do you track your maximum? How do you track your possible max exposure when you're trading 8 to 10 accounts? I don't see why you would trade 8 to 10 accounts, Mark. I don't. Yeah, I don't. Why would you have 8 to 10 accounts? I think that's probably too much to have on on your own. Yeah, I don't. I get you would do the same thing and have you would do the same thing and just have your, depending on the account size of each account, you'd have to calculate different your different maximum allowable drawdowns per each account. Again, I don't see why you'd be trading 8 to 10 accounts, but you just have to do it individually based on each account. So if you have a $5,000 account, you got to write down, hey, my position size is this, or my maximum allowable drawdown is this. If I have a $50,000 account, well, this account, I'm able to do this, and just keep them separate. And I would say print out something really, really big on your whiteboard and just make sure that you know exactly what you're trading on each account. Mark says, I'm asking about during a period of active trading, how to keep track of how much you're exposed. I don't think backtesting is possible during multi-pair trading. Yes, it is. If you're backtesting, you're going to have all the results for a specific time. You're going to have all the results on all the pairs that you trade during your backtesting. So as you go back to your backtesting, you're going to know each individual. You're going to know the results of each individual pair. You're going to know, hey, how did euro dollar do? What was my ending profit on euro dollar? What was my biggest win streak? What was my biggest losing streak? What was my maximum drawdown? Stuff like that. You're going to know that on each individual pair. When you create a portfolio is no different than just combining all of those individual pairs. So when you do the analysis, you just take your euro dollar, your euro yen, your pound dollar, whatever your dollar yen, whatever you're trading in that portfolio, you just put it all together and lump that into one result, and then redo the numbers based on that. But you'll have all the individual results from pair to pair, because you do back testing separately per pair. You guys should be doing it. You shouldn't be just back testing random pairs. You should be doing all your back testing on euro yen, all your back testing on pound yen, and keeping those separate in separate tabs if you have it, say, on a Excel spreadsheet. And then when it's time to create that portfolio, you have all the stats, and it's just putting the pieces together. Jason's laughing at me trying to play golf. Akil, do you have a demo account where you can quickly demonstrate how to place a Ninja? Okay, yeah, I can do that. Let me just see if there's any other questions that I missed on here on the back testing or whatnot. I've noticed sometimes that you get to different patterns or even same patterns at different price levels. Do you take them both, even if the first fails? I noticed that you sometimes get to different patterns or even that you get to different patterns. I'm not quite sure what you're asking there, Rob. If you can maybe rephrase that a different way. I'm just not sure of the question. Can you explain how to have two accounts for different strategies? Yeah, you just have to physically open two different accounts. So it can be with different brokers. You can have one account with FXCM. You can have another account with Gain Capital. Just you can have multiple. You got to get a multiple account license on Ninja. You can open different accounts on NinjaTrader. The multiple account license is gonna cost you a little bit more, but you can do it. For example, if you look at my, I've got a few accounts on here. So I would do it just like that. Are we going to discuss the online lesson? Yeah, if you want to, Gretchen. Yeah, this is free and open Q&A, so you guys can ask whatever you want. Again, it's when I first did the 12-week transformation, there was no such thing as open enrollment. So it was, hey, the transformation is starting today. You sign up today. If you miss it, you're gonna have to wait till next year. And what we did was I went through 1 week at a time. So I would go through week one, because everyone in the transformation was on the same page. Since then, just because we've gotten it as a request, you guys like on demand. You like being able to work through things at your own pace. So now we have open enrollment where you can sign up at any time. So we have people like Danny who's in week 12. We've got a few of you that are in week 1. We got people in week 4. We got people all over the place. So everyone's at a different point in their training. So no longer is the Q&A or the Monday training session going to be dedicated to one specific training lesson, because different people are just at different places. That's why it's a Q&A. If you have a question about something you went over this week, you can feel free to ask it. A few people are on the money management right now, and that's why they're asking questions about back testing and maximum exposure. But I'm here to answer whatever questions you have. So if it's a structured question, you shoot it in. We'll go over something. If it's not, then I'll go over whatever you guys are asking. But it's no longer going to be one specific topic just because we don't run the course that way anymore. And Charles said we talk about multiple patterns on a chart. If we have multiple patterns on a chart at the same time, a lot of it depends on the situation. We had one on dollar yen the other way. If I can, I will take both. If it's an opportunity, for Rob's question. If I can, I will take both. If I can't, I will often take the first pattern that occurs, assuming the risk reward is okay, assuming the profit margin is fine, or I'll take the pattern with the most risk reward. Typically, I'll take the first one that occurs. Like I said, the only time I won't will be, like last week we had one in the dollar yen where there just weren't enough pips to be made, or if the risk reward is really, really bad. Typically, if I get something like a cipher and a bat, but they start at the same leg, I'll take the one with the better risk reward. But if it's two completely separate patterns, I'll take the one that completes first. If that helps you out, Rob. And then real quick, who was it? Jason asked a question. How do you place an order on NinjaTrader? 2 ways. You can just go over here. You can go to your chart trader, open this up at the top. It says chart trader. It's going to give you a little triangle over here. You go to your account. You make it whatever position size you want. You can right click right here. If you want to buy limit order, you put a buy limit order on. If you want to sell stop order, whatever order you want to put on, if you right click, it'll give you the option right here to put it on. So that's the chart trading way. Again, go to chart trader, open up your little side panel, right click, buy limit, sell stop like that. You can place it on your chart that way. You can also go to your control panel. You can also go to your control panel and do it manually from up here. So you can go to currency, you can enter euro dollar, and you can go limit order, quantity, price, and then do it from there. So whichever way whichever way you want to. But again, there's a lot of tutorials on Ninja, guys. Ninja does a great job at explaining everything. So make sure you go through those tutorials. Yeah, and Charles said the order type will change if you're above or below. If you're below, limit, sell, stop. If you're above, sell, limit, buy, stop. Yep. Does NinjaTrader have to stay running for you to execute, or can you turn off your computer? You're going to have to check with your Most brokers, the orders will stay with them, so your Ninja does not have to be up. However, there are a few brokers where the orders stay on the platform and not. If it's one where it stays on the platform, your Ninja has to be up. So it's very important you check with your broker for that. Again, if it stays on the platform, if the broker leaves your orders on the platform and not with them, it has to be up or it won't get filled or triggered. And you can get into a lot of trouble doing that. I used to have a computer where that would happen and it would go into sleep mode and or restart due to some system cleaning or whatever it does every once in a while. And I'd wake up and maybe miss profit because, well, price action went through my level, but my computer shut down, so my Ninja wasn't up. So check with your broker for that. All right, we're about an hour so far, so we're gonna start wrapping things up. Can you use hidden divergence with double tops as confirmation? No, hidden divergence is for trend continuation. Regular divergence is for double tops and double bottoms. Still on module. You guys wait to the very end to ask these questions on module 1. Come on, guys. You couldn't have asked this in the beginning? Wait till we get an hour in. Now I got to rush through it. All right. Still on module 1, wondering how to identify minor and major structure levels. Well, a big help is your DSR levels. You could bring in your DSR levels and set the major and minor structure levels. I always set the major structure level to 4 times the time frame, the minor to 2 times. Typically, here's what I would do. Structure levels that are on daily, my higher time frame, so daily charts, those are going to be my major structure levels. So if I'm looking on Euro Yen daily, say I'm a 4-hour trader, structure levels like this, boom, boom. The major swings on my daily chart, these are going to be my major structure levels when I go down to my lower time frames. Structure levels on your trading time frame or your lower time frame, say like the 60-minute, these are going to be your minor structure levels. A good trick to also seeing major structure levels are where are places where the market hit multiple times. So if I were to move this up right to here, you guys can see looking left, market has hit this level 1, 2, 3, consolidated here for a 4th time, 5th time, 6th time. So drawing that, I always like using the line tool. You can do F6 if you're here on NinjaTrader, hitting F6 and it's drawing that horizontal line out, and then just scrolling back and seeing how many times that price action hit this level. And if you can see that price action has hit this level numerous times, it should be a very important structure level. But typically, your major structure levels are going to come off your higher time frame. So if you're a 60-minute trader, again, it's going to be your daily or your 4-hour structure levels you see off those new structure lows and outside of returns. Those are going to be your major structure levels. Your minor structure levels are going to be stuff like this, the little hidden blips inside. And of course, if you're a day trader, your higher time frame is going to be 60 minutes. So then, what you see on the 60-minute chart is going to be your major structure level for your day trading time frames. Gretchen says trading outside returns week 2 PDF page 3. The ABCD pattern says it is a counter trend trade and to short at D, but we are in an uptrend. What if it turns into a 3 drives pattern? Seems like a very low probability trade. I'll tell you what, if it turns into a 3 drives pattern, you're probably going to make some money off of it. Remember, counter trend trading, here's what we're looking for. Here's an ABCD pattern. A to B, B to C, C to D. Right? If it turns into a 3 drives pattern, we have to see a retracement, right? Retracement could come here, retracement could come here. We don't really know where that retracement is going to come to, but we have to see a retracement. You can easily have targets hit on that retracement. And if you're a counter trend trader, you're not looking for a full reversal, Gretchen. You're not expecting the market to fully reverse. Counter trend just means you're looking for a little bit of relief. It's very important to realize that, guys. When we find counter trend trading opportunities, if the market is trending like this, right? If the market's trending like this, counter trend doesn't mean we're looking for a full reversal. That's not what we should be looking for at all. Counter trend just means we want to get a little bit, we just want to catch the outside return, right? All we want to do is catch the outside return, and the market can go on continuing whatever trend it wants to do. And we know how to identify outside returns, right? We know Fibonacci's. We also know look left, structure leaves clues. So it's important not to get greedy. We're looking for just a little bit, a little slice of the pie, and then we're out of the market. We're not expecting a full reversal. If you're expecting a big move, you're going to want to be a trend continuation trader where you hop on at the outside return and then you ride the trend up. Does that make sense, Gretchen? Counter trend is against the trend. We got to remember that. Yep. It's against the trend. All we're predicting is this, a little move. This is what we want. Even with patterns, right? Again, patterns are counter trend trades. X to A to B, B to C, C to D. With a pattern, all we're projecting is a 382 retracement. That's why our targets are there, right? If we expected a full move, I'd have targets down here every time, right? All we're expecting is this. This is all we expect. It's not a full reversal. That's why I'm not a big fan on trailing profits or trailing targets and whatnot on these advanced patterns. All we're looking for is a little blip. I want the market to move a little bit before it comes back up. This is all I want, guys. This is all I want. Now, there are times where we can expect maybe something like this, and that has to do with our overall analysis, but all I want is this. All I want is this little bit of blip. And that's for any counter trend trading opportunity, even double tops. We come up here, we get a double top, boom, boom, boom. All I expect from a double top is this. I want a little move back to the 382. And market can do whatever it wants. We're like, I don't want to call it snipers, but we're just again, we're like mercenaries. We come in, we're like smart thieves, let's say that. We come in, we don't need to rob the whole bank. We don't need to rob a whole bank. We pick a few safe deposit boxes. We get enough and we get out before we're caught. You try to rob the whole bank, you're usually going to get burnt. Cops are going to get you. Can you physically show us how to crunch your charts from the 30-day to 1 hour? I wouldn't use a 30-day, but you just enter just 60. It takes you down to the 60-minute chart. Enter whatever number you want. You want 4 hour, enter 240 here, and it takes you to the 4 hour chart. And yeah, for you guys, don't be Gretchen and I forgot who else asked it. If you have questions about the module, try to ask those right away. Ask those in the beginning, or shoot me an email over the weekend saying, "Hey, Keel, this is what I'd like to go over on Monday." That way we can spend more time on it. Again, I like to keep these things to an hour just because I have to do something later in the day. But yeah, feel free to shoot me an email saying, "Hey, Keel, can we talk about ABCD patterns and whatnot?" And that way I can turn it into a lesson. I can make the first half of this into a lesson looking at that first and foremost. Yeah, so feel free. Yeah, don't be scared. Again, these are different than it was in the past. Shoot me those questions. We can look at it. But does that make sense about the ABCD pattern? Is that good, or let me know. I'd like to shut things down, but if it wasn't clear, I'll do it. Setting up a fib inversion. Yep. All you're doing is this. Same Fibonacci extension, except you're going backwards. Typically, you would do something like this. For a Fibonacci extension, you would go, say, from swing low to swing high like that and back up. For a Fibonacci inversion, it's the same thing. However, you're going from the previous move. So you're going from your swing low to swing high. But instead of the most current move like this, you're going to the previous move like that. But same settings for the Fibonacci. Same 127, same 1618. Robert says, think most of us are in week 1. A lot of you guys are. We had a big group coming after the Technical Trader Workshop, but not all of you. And that goes for people watching the recording as well. We have people, again, on week 12. We have people week 5, week 10. There are people all over the place. But again, if you guys have something you want to ask and you want to make sure I go over it, shoot me that email or shoot me a message through the trade floor saying, hey, Keel, here was my concern for this week. I didn't get a chance to, one guy asked me a question about impulse legs for patterns. I didn't get a chance. Sorry, I think it was Kevin. I'll email you back later today, Kev. I didn't have a chance to go over it today. We had a fiery day. Sometimes these Mondays are pretty low key, but today they were pretty active. Good, yeah. Yeah. I have no problem answering questions, guys. It makes Monday fun. What happens is typically when people get to the ending weeks, they know everything already, and they're just in the point where they need support. So we come into these Monday Q&As, and it's like, hey, what do you guys have questions about? I know everything, Akil. I just need to continue training myself. So, all right, we're done for today, guys. We're a little bit over what I wanted to do, but good session. We kept it active all the way through. Some pretty good questions. We did a little bit about structure, did a little bit about money management and setting up that portfolio for you guys that are later on in the training. I will see you guys tomorrow in 12-week transformation. If you guys have any questions I didn't get to, just feel free to shoot me an email. Shoot it to akil@tradingpower.com. I check it a few times a day, and I'm pretty active at responding to you guys, so feel free to shoot me that. I did go over to Trade on Ninja. Yeah, it's Jason. Just go watch the help videos. Yeah, watch the record. Just watch. Everything is explained on the Ninja help videos. It's pretty simple. Again, it's basically if you can right click a button, go and buy. But just go over to help videos. They explain everything. They make it very simple. So until next time, guys, plan your trade, trade your plan. I'll see you guys tomorrow in the live room.